Hey everyone, this is Mike Kramer. Today is December 7th. It's around 6 o'clock New York time. So tomorrow we're going to get the November job report. It seems like this could have some importance just because of the way the market's been settling out the last few days, because of where rates are and because of where some of these currency markets are. Right now we're looking for 183,000 new jobs to be created in the month of November. That's up from last month's number. We're looking for an unemployment rate to stay unchanged at 3.9%. Average hourly earnings 0.3 versus 0.2 month over month. Year over year, we're looking for 4% versus 4.1. Labor force participation rate 62.7 versus the same last month. So, I mean, when you look at these numbers, there's just not really much changing here, which would really suggest that there's some sort of major change occurring in the labor market, at least on the surface. So, I think any surprises in here, whether it mean the unemployment rate ticking up to 4%, or on the other side, the non-farm payroll number coming in over 200,000, 225,000, that really could, really reverberate through the currency and the rate market, both higher or lower, depending on how the numbers come in. And so I guess if there's like scenarios here, you really need a number kind of right around those estimates to kind of keep things as status quo. So it's a really sort of like 1 out of 3 scenario here, and I think that this is an important report just from that standpoint. And then at 10 o'clock we're going to get University of Michigan. This number 3.2% was obviously the cycle high last month. We're going to want to see if that number comes down a little bit, or if this is something that's becoming a bigger issue over time. Again, estimates are for 3.1%. If we just take out one more look right here, the whisper numbers for this job report based on Bloomberg is 170,000. There's 241 estimates. It's a lot of estimates. And they're looking for a number that's going to come in cooler than what the actual survey is. So that's something, to be aware of at least. When we look at the markets, we'll just start with the yen versus the dollar, because that had obviously a very big move today, dropping by 2%, and that suggests the yen was strengthening. Right now, the yen is clearly oversold from a Bollinger Band perspective and an RSI, so that kind of tells us that maybe the yen is due here to consolidate for a day or two. This 145 area seems to be a relatively important area that you really want to see the yen stay around, although we're down at 144.23 right now. Clearly, the next big area of support wouldn't come until 142. So this is certainly a spot where, again, the job report's going to have a lot of influence and could really shape where this thing goes as well. But what does seem clear, though, is that at some point, it seems like the days of negative interest rate policy in Japan are coming to an end. When we shoot over and we look at the euro, we can see the euro has actually been weakening again versus the dollar. We're not really overbought. We're not really oversold. We're just sort of right in the middle. It seems that there's some meaningful support at this 107.30 area where we have the lower Bollinger Band, where we have the uptrend line from the October 4th low. And then if we want to, we can even draw in some horizontal support and resistance right here. So this is a level I would be watching very closely. A break at this level clearly sets up a move back towards 106 and a push higher to 108.5. Clearly, you get a hot job number tomorrow. That would be enough to probably push the euro lower versus the dollar. When we look at the pound completed that 61.8% retracement, and we are seeing the pound moving lower again. Again, pound's not really oversold at this point, not overbought. So it's sort of, again, in the middle. Here's your 20-day moving average. So that seems to be offering a little support. So again, below the 20-day moving average, you probably have room to decline back into this 124.70 area, maybe all the way down to 123.5. Upside seems a little more limited at 126.23. When we just quickly look at the 10-year, that the yield was up a little bit today. You can see we are kind of settling down around this 410 area. We've clearly been trending in a nice downtrend on the RSI now for the 10-year, and so it's going to take something sort of meaningful to get the 10-year going higher. And again, resistance immediately would come around 420, with support still around this 410 area. Break of 410 sets up a move back down to maybe 390. So this is an important spot for the 10-year right now. Clearly, we can see it's not overdone to the downside in terms of rates, so it is possible for further to go. You can see also that the 2-year has just been consolidating around 460. I think if we break this 460 level, you're going to really see the 2-year begin to go. Certainly, it has the opportunity to go back into the 430s from here. Again, you can see rates aren't really overdone to the downside yet. It almost seems like the 2-year is getting ready to go lower. If you just look at the way the pattern seems to be structured at this point, just sort of creating this descending triangle look. And so this would be something to pay attention to, because perhaps the 2-year is maybe telling us something about where the job market may be going in this report, or maybe after this report. So keep an eye on this tomorrow. When we look at the Dow, that's pretty much just been consolidating sideways, which is exactly as we expected it to do. After that big run-up, we had noted the other day when we were doing the last video that had reached the upper Bollinger Band, that we were trading above 70 on the RSI. And you can see we've just been consolidating now inside of that Bollinger Band. Here's this big long-term uptrend. That clearly is a level that could be retested at this point, very close to it. When we look more closely at the patterns here, again, there's not really much here to see. You could argue that maybe there's a little bit of a bull flag forming here, which would suggest that maybe we test this 36,460 region. But at the same time, you can also argue that maybe we're just topping out here and just churning. As you can see, there's potential here for what could be a head and shoulders pattern too. So there's certainly two looks here you could go for, depending on what case you want to try to make. But really, the way you would know, obviously, is if you take out this high, invalidates the head and shoulders pattern, lends to the idea that you can go back to 36,450, while if you take out the low here at 36,032, that's going to lend to the head and shoulders pattern, which probably leads to a gap fill back down here at 35,425. When we look at the NASDAQ, that had a strong day today as AI mania continues to rage. We're just kind of flirting and consolidating around this 16,000 level. That's the level that was really the around the July highs, and it's really, more importantly, a level that goes back to this January 13th point in time. So at this point, we're really not getting much clear direction out of the NASDAQ. Again, it looks fairly tired. It looks fairly worn out. It's very possible we're just consolidating through time. But again, it's not really a positive sign that we haven't been able to, that we keep closing below all these other highs. It's not really a great thing that we had this big, sort of wall into the close with a gap higher. These gaps tend to fill pretty quickly, usually within a day or two. So it seems entirely possible that this gap could close in the blink of an eye if the market wanted to. And really, until we can take out this high right here, it seems like we're really just not going anywhere. And we continue to remain below this trend line that we clearly broke earlier this week. So that's a big red flag here, and a break below 15,740 would fill the gap here at 15,480. And finally, when we turn to the S&P, we had almost what looks like an inside day, but we just barely by about 20 basis points moved above the high from yesterday. Basically, I mean, we nearly filled the gap from this drop on Monday, and it just seems like we're just doing a lot of, again, churning here on the index. And again, you can see that there was clearly a broadening wedge here that was forming. And again, we had yesterday what looked like a nice uptrend forming. But if we move it to account for yesterday, you can move it down here. If you draw this from here, again, you could be making the case that we're just sort of consolidating here in what was a broadening wedge, now turning into a symmetrical triangle, which really continues to have the shape of a diamond pattern to it. Again, until we break out one way or the other, it seems like we're in a very similar spot to the NASDAQ. And this is why tomorrow's job report may be important. And just one other thing I'll point out is that the VIX has a very similar look to the S&P. When you look at it, it has what looks like it's forming a reversal bottom. And I know you're not supposed to do technical analysis on the VIX, but it doesn't mean that it doesn't work from time to time. And if we were to get some sort of surprise tomorrow to get the VIX moving up, that would certainly be enough to break the S&P 500 down the other way. So it seems like tomorrow's shaping to be an important day for the markets. Whether the data supports it or not, it may not matter. But what does matter is that it seems like we're coming to some sort of conclusion one way or the other. So that's all I have for you today. Have a great weekend if I don't talk to you before then. Bye.